Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending October 3rd, 2025. So as you can see, I'm recording from the head office in Quebec City, but I'm also recording on October 2nd in the afternoon. So if there's something new about the government shutdown coming out before the morning of October 3rd, I'm sorry I can't comment it here, but the topic is Washington is closed for business. We'll be discussing the government shutdown here, which historically has been pretty much a non-event for both macro data and the market. So the market tended to continue the trend that they were already on during the shutdown. But this time, could it be different? Because we are very dependent on the data on the labor market and inflation these days, and the fact that the statistical agencies in the US are closed and they likely will not be publishing those data. Does that mean that we have more uncertainty creeping into the market? We'll discuss that in a minute. But before that, look at this week's market that they close on Wednesday after 3 days. So positive for bonds and equities. TSX leading the way along with emerging markets, and the price of gold up by 3% or close to 3% after 3 days. Year to date about 50%, so solid performance. The trend continues here. So basic question, no data, no problem. That's a very, very basic question that we're facing here. During this government shutdown, what we do know is that we will likely not have access to the very important data on the labor market and on inflation. Now the question is, will the market just continue to cruise along because there won't be the potential for negative surprises when we don't have the official data? But the flip side is that we do have alternative data from the private sector, but this data tends to be a bit more volatile, let's say. So could that just feed into some return of volatility in the markets, or a loss of risk appetite, or maybe some confusion by investors? We'll see, but the base case for us is that the market continues on its trend. But this week we did have some alternative data from the ADP showing that the US shed 32,000 jobs. And we had a Challenger report showing that the hiring plans and the job cut announcements dropped over the last month or so. So that confirms the same story that we had already, that the labor market is slowing down, and that feeds into the view on the Fed. The Fed is expected to cut twice more in 2025. This is what they penciled in the dot plot. And then the market is thinking 2 more cuts by September 2026. So pretty much 4 cuts over the next 12 months. There's nothing new in this data here to change the market's view. And if you're the Fed and you don't have data through the end of October until the next decision, then maybe the bar becomes pretty high to change the view that you already had, which was that 2 more cuts in 2025. So that means likely October and December. That pretty much crystallizes another rate cut here. So we think that during this shutdown, maybe the market will just cruise along because, again, no data, no problem. But again, let's see if the lack of a proper macro compass feeds into some volatility. But again, this is not the base case that we have currently. So what we'll be watching next week in Canada, we'll have the Bloomberg Danus sentiment indicator. We'll have the jobs report and the unemployment rate in the country. In the US, maybe we'll get more data published if there's an end to the shutdown. But if not, the only notable indicator that we know that we should have is the University of Michigan Confidence Survey. So again, markets pretty much flying by sight here on the macro side. So that wraps it up for the week. Always a pleasure to serve you. If you appreciate the content here, please share, and of course, come back next week.